Below.
Below, okay.
The first one, the green one.
Okay, the first one is below, okay.
You have the green, you see the green caption, you have the red caption.
Okay.
On the green caption, you have prices below.
Okay.
So once the candlestick crosses below the moving average line, that's a bearish trend. That's sellers are going to dominate the market. On the other hand, when you have the price cross above the green line, that's a bullish reaction as buyers are now in the market. That's just a typical example of a moving average application.
Now, I've asked this, I think it was Mike I asked the question.
Okay.
I think I'm going to ask you too. Now, talking about these tools, fundamental analysis, moving average and some others that we have talked about, it would appear that if every trader has this information, at the end of the day, if applied properly, I guess, there won't be any losses. Now, it looks like it would be a situation, a scenario where everybody makes profit at the market and there are no losses at all.
Well, you can't always have a win-win situation. Let me bring it this way. When you're dealing with the currency markets, okay, and you're actually putting your money, okay, it's a different ballgame entirely. If you're having a demo account, a practice account, you can afford to do anything, play anyhow. But when it comes to real money, your emotion changes. And that's
one is extremely more cautious. Obviously.
More cautious, and that's where the two emotion comes in: the fear and the greed. Okay, usually this is what happens on the first click of the mouse button, buy and sell. Your heart is beating, and you're wondering if you're doing the right thing or if you apply the right analysis. At times, the fear factor comes in, and you disregard everything you've learned, everything you've known. And that's the end. It usually happens. Let's see. Have you ever driven a car before? Do you drive?
Yeah, I do drive.
Okay. How was your first experience driving?
Well, I was obviously nervous and hitting another motor.
Yes, exactly. That's what happens in the currency market. The first time you sit there, the experience, the feeling is different. It's as if you're lost in the other world. So that's where the issue comes in discipline. That's what we keep on passing across to our basic trainers, our students the first time. Please just try in every possible way. Put your heart and your mind down and apply this. And the beauty about it is on our platform, we have the micro account. Like it's a mini account, a tiny account where you can start with a little amount of money. Just you can start that to test your emotions. How will you feel? Okay, I can put as little as because there's no minimum amount on that account. Okay. $30, $50. You just want to test run with that and feel how it will be if you're to use a larger percentage of your money in the trade.
Okay, interesting. Unless there's a concept called moving average cross, which is also used to forecast a trend at the market. Could you just throw more light on that?
Okay, and the moving average cross, when you're talking about moving average cross, we use the 5 days, the 5-day moving average. If you look at the chart, we have a 5-day moving average, we have a 10-day moving average. The 5-day moving average is closing prices, okay, of the currency pair over the last 5 days. And the 10-day moving average is the last closing price of the currency pair for the last 10 days. The cross is usually used by traders because if you look at the first chart, we just had just one green line running across. On the cross right now is a different thing entirely. Like
okay,
if you look at,
I believe that's a chart.
Yes, that's a chart we have up there. We have the 5-day moving average and the 10-day moving average. Okay. The 5-day moving average is known as the fast moving average. Sorry, the 5-day moving average is known as the slow moving average, okay, while the 10-day moving average is known as the fast moving average. Okay, the higher the period, the closer it is to the price. The lower the period, the farther it is away from the price. Because if you look at the moving average, 5 is farther from 10, right? The cross comes in this concept. This is what basically most traders use as a strategy when there's a cross. Like now, if you look at our 5-day moving average on the first part, it's above, okay, the 10-day moving average. When you have that, okay, crossing, when we have the 10-day crossing below the 5-day moving average, that is a bearish indication.
When you say bearish, meaning that the trader at that point should pause and watch to see what direction, or that he's likely to make more losses if
no. When I'm talking about bearish, because in the currency market, you make money both ways, when the market is coming down and when the market is moving up. So when you're talking about bearish, there's a sentiment that the sellers are the ones dominating the market now. So when you have that cross up there, it means the sellers are now dominating the market, and you're supposed to be in what? In a sell position.
Also, okay.
Yes. Okay. You have to follow the market trend, because that's the cliche in forex market. The trend is your friend. You follow the trend in the market.
And at no time has it been that when the sellers are dominating at that time, that it was for some reason, for some fluke, artificial or not right. As in when I say when the tools or the graph shows that the sellers at that point are dominating,
okay,
there's never been a situation where it was some kind of technical error.
No, because the market is following price, as in market reaction. What is dominating the market at that point? If you have sellers in the market, yes, you have sellers dominating the market. Yes, the change can come in if, as you said, a fundamental analysis comes up. Okay. Are you getting the picture? Yes. If fundamental analysis comes up, there may be a reversal in the market. And funny enough, when that happens, you see the moving average. If you look at the chart again, you see the moving average cross back up.
Okay.
There'll be another cross, showing an indication that the bullish trend is now taking place.
And at that point, the trader can take a buy position and make some gain. Okay, let's move on. I think we're running out of time now. Can one use moving average to cross as a second one to predict the next market trend on any currency pair, especially the USD and another currency?
Yes, you can use the moving average cross to determine or predict the next trend in the market. In our last chart, we're going to show you now. If you look at the market trend, just like what is happening in the Eurozone, there's been a bearish market, and that's, if you look at the currency pair.
That's for the euro.
For the euro, yes. You can see there's been a cross. It means the sellers have been dominating the market. Just recently, or just...
Meaning it's not a good time right now to buy the euro.
It's not a good time now to buy the euro.
Okay. So can we use, is that the only, what other currency pair can we use?
You can use it on any currency pair. You can use it on virtually on any currency pair. It's not restricted just to Euro USD. Because as I said, moving average takes into consideration, the closing prices for the certain number of periods of any currency pair. So it's not strictly to only Euro USD. You can use it on any currency pair.
Okay, what other tools work best with this moving average in terms as in pairing them together to give you? I know we've talked about before now. We've talked about some other technical tools, but for this particular one, the moving average, what other tools are nearest or closer to it?
Closer to it is the candlestick. You can remember what my colleague talked about on Monday, the candlestick. You can use that very well as part of the tool you use in analysis. I think he brushly talked about the stochastic, the overbought and oversold level. That is also part of it. There are so many tools which will come on later on. Go through them one by one that you can use in support to other technical tools.
So we can't just, you don't have to use the moving average tool alone to take decisions.
It's a yes and no. Let me put it that way, the yes and no, because